Hello traders, welcome back to another video. So on today's video we are doing a trade recap on this video here that we made on the 10th of February. Then we were looking at NZDCHF, guys. Now so let's start off with our analysis so that you can see how it went. And for those who didn't watch the video, the link is in the pinned comments. You can just watch it. So as you can see here on the daily time frame, we have the market pushing down, giving us this lower high. Then we had a lower low around that point, of which that means we have a break of structure within this point. And this is our trading range from this high to this low. We are looking for a realignment at the top of the structure, or we can have like maybe a change of character on the lower time frame so that we can target at this low point here. So that is how we had like the trade idea on the higher time frame. So looking at the 4-hour, we had a few structures that we were focusing on. As you can see here, this is the break of structure that we talked about, and then this was an area of supply, as you can see on the 4-hour time frame. And I was also looking at the internal structure. As you can see on the internal structure, we had this lower low here, lower high, lower low, then we had a higher high, higher low. That means we have an internal change of character within this point here. So this is the internal change of character, followed by a break of structure around that point, followed by another break of structure, which is this one here. And for those who don't understand, guys, market structure, you will just watch the videos that I already dropped, then you can get to understand it. And then if you have any questions, just drop it in the comment section. So we have a high, a low, then we had a higher high, then this is your higher low here. And as you can see, the market is pushing to the upside, and we were targeting this area of value so that we can start looking for selling opportunities. And as you can clearly see from this point, we had a break of structure, and what we talked about, guys, was a bit simple, just because we were looking for this change of character to happen, just because this is the lowest point and this was the highest point of this movement here. So let me just do this. So this was the highest point, and then this was the lowest point, and the market gave us a nice change of character within here. And after having the change of character, obviously we need to look at areas of value within this point. So we were using a Fibonacci from the high to the low, just like that. And as you can clearly see, this was the golden zone here, and we talked about this zone giving us some nice selling opportunities, and also the zone within this point here. And as you can see here, the zone worked out very nicely at the top of the structure. Reason being, we had liquidity around this point here, equal highs, and that those equal highs were taken out. As you can clearly see right there, we had the market taking out that liquidity. That is why we started selling, guys. And sorry about the background noise, guys. Sorry about the background noise. And as you can see here, the market was pushing up, and then we were waiting for the market to mitigate this area of supply. Then we took out this liquidity here and had another internal change of character. As you can see here, we had this lower low, then we had a higher low, then we had a lower low here, then we had equal highs. As you can see from this point, these were equal highs or a liquidity sweep around this point. Then we had another break of structure around this area. Then we look for our highest point. As you can see, this was our highest point, then this is our lowest point, just like that, which means this is a new break of structure around here. So after having a break of structure like this, then it means that this is your lowest point and this is your highest point. And then what you expect after getting that mitigation is a change of character. So as you can see from this point, we had a nice change of character. Now we were looking for sales, and as you can obviously see from this high to this low here, the market tapped into an area of value here. And for those who don't see it, guys, this is a fair value gap from this high to this low here. We use 3 candles for us to identify a fair value gap, guys. And I'll get deeper into those fair value gaps like on a later stage. So as you can see here, but like you just need 3 candles: the first candle, the second candle, and the third candle, guys. So you're looking at the first candle and the third candle. If they meet each other or mitigate each other, that is a clean price action or a clean order flow. But like if they give you a gap like this, this is called a fair value gap. So on the 15-minute time frame, that is where you'll get to understand that we tapped that fair value gap, and that is when the market started giving us like a change of character again, just because you need like more confirmations. You cannot just trade an area like this, just because looking at our time frame, you can also see that there is an area that the market could have sold off from. As you can see here, this is a fair value gap also, and this is a nice supply area that we can sell from. So whenever the market mitigates areas that are not at the extreme, you just need to wait for a change of character on the 5-minute or the 1-minute time frame, guys. Now, and as you can see here, you can see that structure was pushing up. As you can see, high, low, then this is a high, then this is a lower low from that point. So that means this was the change of character that we needed. And as you can clearly see, there was also liquidity, guys. Now, and I think these were sessions, Asian session range around this point. I don't have like my, let me just check if I have like my FX and session range. So as you can see right there, so that you can see if I am, so yeah, as you can clearly see, this was the Asian session range around that point. So that is why the market gave us this nice liquidity here. So the liquidity got taken out, then that is when the market gave us some nice selling opportunities. So these setups are cool, guys, whenever you have them, just because you'll be having good risk to reward. So as you can see, from this point to this point, the market gave us a nice fair value gap. So I'm catering for the fair value gap also, and also catering for the supply area at the top. So you can just zoom in, then you'll see that this high, this low point, and at this high point here do not meet each other, which means this is your fair value gap, and the supply area at the top of the structure, guys. Now, so the entry should have been around here, just like that. Your stop loss just above this area, and I didn't take the entry just because I was using a funded account, guys. Now, I was using a funded account. I was on like phase 2 and didn't take this trade. But like if I was like not busy like with other accounts, then I would have taken this nice trade idea here. And for those who took it, just drop a comment or a fire emoji in the comment section, and I'll see you on another one, guys.